Hey, good morning, everybody. Or excuse me, good afternoon, everybody, and welcome to this second day of our education week at earningsbeats.com. It's a pleasure to be here with all of you again this evening. Hopefully, you enjoyed last night's session that we had. We talked about our strong earnings chart list and our raised guidance chart list. Looking forward to sharing a little bit more of our information with you today. Also, I want to remind you that in the description for each of these sessions that we do this week, there will be a link where you can download and take a look at the chart lists that we discuss. So I want to make sure everybody's aware of that. Also, you can help us on YouTube by simply liking the video and subscribing to our channel. We certainly would appreciate that as well. So tonight, what we're going to do is we're going to talk about, the strong AD chart list. That's the strong accumulation distribution chart list. Also, we will talk about our bullish trifecta chart list. It's really a unique chart list and one that I think can help you focus on a much smaller list of stocks that you might want to keep an eye on in terms of your trading or investing and some of the ideas you may have. You may want to add that. Really do appreciate, though, all of you tuning in. We have a lot of members here today. We certainly appreciate all of our members. We've now been in business for 21 years, and some of our members have been with us the entire 21-year duration. We've gone through a lot of changes, really morphed. I think that we're the best version of ourselves now. And so really appreciate all of the members that have supported us over the years and that continue to do so. Also want to thank all of those on our EB Digest. We do try to give back to that community. If you're not already on the EB Digest, you can go over to our website at earningsbeats.com and scroll down. You'll find an area where you can sign up with your name and email address. No credit card required whatsoever. So that's another great way to follow us and to learn a little bit more about how we approach the market. And then finally, all of you on YouTube that have been joining in, we've been building our YouTube community here over the past year or two. And we certainly appreciate all of the support that you all have given us as well. So with that, I'm going to go ahead and jump in to taking a look at some of what I have for you tonight. So the first thing I want to start with is I want to start with the strong AD chart list, and keeping in mind, first of all, what the purpose of it is. What we decided to do, I use the strong AD accumulation distribution line as one of my signals, and you can kind of see it on our strong AD chart list. A lot of times our charts will be set up a little bit different on various chart lists, depending on really what we want to feature. And of course, with this being our strong AD chart list, one of the key things that we want to look at is the AD line. And so that's what's featured at the very top of our charts. And the whole idea here is, we take a look with the strong earnings chart list and with the raised guidance chart list. We're taking a look at fundamentals. We're filtering out low dollar stocks. We filter out the number of shares. We want to make sure that those charts that we include in those chart lists are liquid. And then we put them through not only the fundamental test with the earnings, but then also the technical test. When I pull up the charts, I want to make sure that the charts look solid. Either they look solid or maybe they're part of a group that's improving, an industry group or something. But there's got to be something technically. It might be a stock's been downtrending for a long time. All of a sudden, they came out with really good earnings and they gap up and they seem to break that downtrend. So it might be a long downtrending stock all of a sudden starting to show a little bit of strength, and we want to keep an eye on it. So we put it into our strong earnings chart list. The AD chart list is a little bit different. So I'm going to show you in just a minute how we filter it and what we look for in order to come up with, what we start with in terms of our strong AD chart list, and then how we work our way through it. But the bottom line is you absolutely have to have a strong AD line. This AD line over the course of the last year, maybe even at a minimum, I want to see a really strong AD line for like the last 3 months. I'm not going to include a strong AD line chart in this chart list if we just have 1 or 2 days of strength where the AD line just is taken off because of a high volume day where we close near the high of the day or maybe on the high of the day. and all of a sudden the AD line shoots up. That's not really what I'm looking for. What I'm looking for is something that's a little bit more consistent. And I actually did take some notes. Actually, hold on one second. It had fallen, because I want to give you, when we look at this chart list, I'll show you how many charts are on it right now. Could have just looked there at the top, but anyway, we're going to have to look. Right here, 284. And I would say the number varies. I think maybe somewhat dependent on how the market's trading and what the overall AD line looks like on our major indices. But I've seen the strong AD chart list go from anywhere from maybe 150 charts on the low to maybe 500 on the high. So right now it's kind of in the middle, closer to 300, just a little below that 300 level. And that's fine. I mean, again, we're not going to push it. We're going to put the charts in there that kind of, look like they've got a solid foundation for that accumulation distribution line. So of those 284 charts, though, I went through all of them right before this session, and I pulled up 20 of them that I thought, and I'll show you some of these, but these are the ones I would say are the strongest AD lines. So you can always come back to the recording and check this out. But let me give you those 20 stocks. And the first one it's actually a gold stock, AEM, Agnico Eagle Mines, AEM. Second one, ATEN. Third one, AXGN. Fourth, BSX. Fifth, CAE. Sixth, ETR. Seventh, FTNT. Eighth, GDDY. Ninth, GILD. 10th, HWM. 11th, IBKR. 12th, IBM. 13th, PANW. 14th, PLTR. 15th, RBLX. 16, SE. 17, T. 18, TRGP. 19, WMB. And 20, WMT, which of course is Walmart. I'm going to pull up a couple of those because I want to show you, when I talk about really consistent AD lines, one of the things I can do is just pull this up and I'll go to Candle Glance. And the way I have my Candle Glance set up right now is it has price action on top and has the AD line on the bottom. So I'm going to go to the first one, which is AEM. These are in alphabetical order. Here's AEM's AD line. There's the price action. And look at the AD line. Some of the others are up and down, but mostly going higher. This one just seems to be very, very steady, just continually moving higher over and over and over again. If we move to the next one, which is ATEN, right here, again, from about maybe May of last year, it's been straight up, and it's really been particularly strong over about the last 5 months or so, going up seems like almost every day. Let me see. We'll scroll down. We'll do another one. Let's do IBKR. So I got to go find the I's. Right here, IBKR. Actually, these three in a row, HWM, IBKR, and IBM, all three, I think, look at really, really strong. So what this tells you, the way the AD line works is it ignores gaps, number one. So I believe market makers help. Well, I think in some ways they manipulate us many times, especially when we get into a extremely volatile market. We'll start to see a lot of gaps. And to me, institutions can't sell shares during a gap down. There's not enough liquidity. So that's not distribution. It's a gap down, but to me, it's more manipulation than it is selling. Same with a gap up. When you get a gap up, it's not that there's a lot of folks that have been buying and driving that price up over, the course of the day. It's just opening there, just magically. And so the market makers kind of control this from close to open. And there can be news. It can be no news. It could be something on the overall market. It could be a jobs report where it comes out, market reacts favorably, and most stocks gap up. It could be more specific. It could be one company reporting earnings, and the stock, has a great earnings report, was trading at $100 before the close, and the next day it opens at 120. So there's a lot of reasons for gap ups and gap downs, and most of them are just if the futures are up a little bit, maybe a stock gaps up just a little bit, and then quickly, fills the gap, and it's no big deal. But some of these other gaps can be somewhat misleading, and I think the AD line helps to straighten those cases out, because all the AD line focuses on is what was your low of the day, what was your high of the day, and where did you finish? So if you finished right in the middle between the high and the low, there's going to be no change in the AD line. If you finished right on the high, then the multiplier is the volume. So all the volume for the day gets added to the AD line. And if you finish at the very bottom, all of the volume for the day gets subtracted from the AD line. And so when you see a stock like these three, or you see stocks like these three, HWM, IBKR, IBM, and they're going up continually like this, it's telling you that these stocks have a higher tendency to finish the day strong or somewhere in the top half of its candle for that day. So how can that benefit us as traders? Well, if they tend to finish in the upper half of the day, when you get morning weakness, a lot of times it can provide you an opportunity to trade. Maybe it's just for that day. Maybe you like these stocks and you just want to hold them. But for me, the AD line gives us a possible day trade where you get in sometime in the late morning, maybe it gaps down, sells off a little bit in the morning, and then you decide, hey, I'm going to take a chance. Maybe you wait for a reversing candle on like a intraday 10-minute chart or 15-minute chart or something like that. And then once you get that reversal, you get in, you close it, you get out at the end of the day. Maybe you have a stop intraday. It's up to you. But high or strong AD lines, that's what it tells us. So when you look at the strong AD chart list, this is all that it's focusing on. Most of the time, stocks are going up, but not always. And I'll show you the filter here in just a second. But anyway, those were the 20 stocks. Those are 20, what I believe, 20 of the strongest in the strong AD chart list, which has a total of 284 stocks in it. So there were a lot of stocks. Here's HQY, Health Equity. I mean, it's consistently gone up most of the year, but it's had some pullbacks and so forth. But it's still been strong throughout most of the year. It's just not as consistent as you can see these other three. And so the 20 I gave you were just ones that, stocks that in my opinion, have been very, very consistently moving up and likely provide some pretty good opportunities to trade for profit. So let's talk a little bit about the filter. So here is the scan that I run every time I want to update the strong AD chart list. So you can see, first of all, it's got to be a stock. Okay, that kind of makes sense. The simple moving average for the last 50 days needs to be greater than 200,000. So I do that for liquidity. I just want to make sure, listen, we're putting this out to all of our members. It's not just the one person who's going to trade. If it was just me, I'd probably be okay if volume was over 100,000. But because it's for a group of members, I want to make sure that these stocks trade at least 200,000 shares on average a day to kind of help it make sure that we have some liquidity, decent liquidity in these stocks. Clearly, stocks that trade more volume have better liquidity than stocks that trade less. One of the other filters that I put in here, you can see, is that the scooter is greater than 80. Now, if you're on YouTube and you're listening to me for the first time, or maybe you're just following me and you don't have any idea what the scooter is, it's just a relative strength formula at stockcharts.com, and they call it their stock charts technical rank, SCTR. So that's all it is. It's nothing fancy. It's focused mostly on how a stock is performing over the course of the last 5 to 6 months. It's not a long-term relative strength indicator. It's really, the limitation is that it's only looking at the last 5, maybe 6 months. And it's looking over different time frames. It's looking at where the stock's trading relative to some of its moving averages. So a stock that's way above its moving average is going to get a higher score than a stock that might just be sitting right on its moving average. So you're going to have more momentum. You're going to have more relative strength in stocks like that. And then what you'll see here is I go back and I say, okay, 12 days ago, if the scooter was above 80. So in other words, this is kind of a clause where I'm saying, if I run this scan right now and the scooter is above 80 right now, it's going to be included. But if it's below 80 right now, but it was over 80 12 days ago, then I include it. If it didn't meet any of those parameters, but it was over 80 30 days ago, then I include it. Then it gets included. And then finally, if it was over 80 60 days ago. Now, these days ago, what they relate to are recent highs on the S&P 500. So when I run this, like if I was to run this right now, this one I ran as of the close on Friday. So now we got the close on Tuesday. So there's been 2 more trading days. So what I would do is, if I was going to run it today, this would be 14. This would be 32. This would be 62. So essentially, I'd come up with the same list because I'm going back to the same time period. And then as we move on, this period 62 days ago probably will drop off. And there might be some other highs along the way that I would want to include in here. Then I put in here, close has to be above $5. We just don't trade small dollar stocks. It's not really what we do, what we look at. And so for the most part, I mean, there might be stocks that trade above 5 when we put them on the chart list and they go down below 5 afterwards. Those obviously would continue to be covered. But at the time that we run these scans, they would have to be over $5 to be included. And then I just go down and include groups. So it's like, okay, give me all the sectors, whichever, it can be in any of these sectors. Now, when I run this, and I'm just going to show you right now, I'll go ahead and run it. It is showing 1,071 charts. Now, if you're familiar with stock charts, you know that you can't download a list that has more than 1,000 stocks in it. That's the limitation for a chart list. So what I ended up doing last time, because I think I came in around 1,100, similar to this number, but it wasn't exactly the same. And it's probably because of where we sit right now. So if I had gone back and changed this scooter greater than 80 today to scooter greater than 80 2 days ago, then it probably would have come up with more charts, because over the last couple of days, of course, the market's been dropping. So many of the stocks maybe that met the 80 threshold because of this current scooter. As of today, maybe the ones 2 days ago that would have met didn't meet today because of the drop that we've seen in the market. So hopefully that makes sense. Anyhow, so what I would do is I would go back and maybe drop out, I don't know, maybe take out industrials, just as an example. So I would just drop that out and I'd run the scan again. And now I'm at 950. So now I can drop them into a chart list, which I did set up just a test or an example chart list for you to see how this works. But I hit save to chart list, and I could put merge because this chart list has nothing in it. But usually I would just go replace, and I would go down to the strong AD March 11th, 2025 YouTube example chart list. I just set that up. There's nothing in it right now. And then I would just say save to list. And so right now it's saving. So it'll take a couple seconds. And then there it is. There's the chart list. Here are all of the charts that are in here. And then what I would do, this is how I do it. So you're going to get an idea of how much time is spent. But now, and remember, I still have to go back and add industrials later too. I separated those, so I'd have to do those separate. But I'm going to put these in candle glance, and I want you to look at the AD lines down here on the bottom. So immediately what I'm going to do is, this one's just been sideways, not really strong. I'm just going to delete, delete, delete. Okay, ABBV looks good. That's the first one on our chart list right now. And then the next one, AB, nope, nope. That one looks pretty good. Abbott, nope, nope. And then this one is where it starts to get, do I include it or do I not? Okay, it's been strong for the last 3 months. Probably would go ahead and include it. Then ACIW, for the most part, it's been strengthening over the course of the last year, at least last 9 months. But then ACMR, terrible AD line, gone. ADAEA, gone. So this is 1,000 charts that I'm going to go through when I do the strong AD chart list. So you can do this at home if you want. But what we do in the research that we do, you can kind of get a sense just from looking at this one chart list, how long it's going to take and how tedious the process is, and the judgment that has to be used in determining whether or not it should be on or off our strong AD chart list. But once it goes on, then you know what? The scooter is either strong right now, stock charts technical rank, it's either showing some pretty good relative strength right now, or it has recently. And the reason I do has recently, because maybe the stock's price is going down, but maybe the AD line is still going up. So the stock may not be hitting the necessary scooter score filter now, but maybe it did 14 days ago or 32 days ago or 62 days ago. And so I include those so that I can take a look at the AD lines of stocks that have been strong recently that might not be strong today. And just see if the AD line, because if a stock's going down, but the AD line's going up, I probably am going to want to keep it on this strong AD chart list, even though the relative strength has gone down and no longer meets those parameters that I had in there before. Anyway, that's how this thing is created. That's how it gets filtered down. That's how I get to 284 charts from over 1,000. I have to go in and eliminate 750 of them manually. So when I say that the work we do at Earnings Beats really doesn't allow for us, or certainly doesn't allow for me to trade as often as I used to, I put a lot of time into Earnings Beats trying to help all of our members. And so as a result, I would say probably over the last few years, my trading hasn't been as good personally as it had been prior, because I didn't commit all my time, or the majority of my time, or more of my time toward trading. As we've gone and done more and more and more research, more and more of my time is spent in this area. So hopefully you get a little appreciation out of that strong AD chart list after seeing the process that we go through. Okay, other things on the strong AD chart list. How often is it updated? This one, the AD line, when you look at it, yeah, we might get an adjustment pretty quick, with 1 or 2 days. But weekly, to go through all of this work over and over every single week, to me is overkill. I think if we update our strong AD chart list monthly, that's fine. And that's what I generally do. It's usually right around the middle of the month. I did just update it recently because we were going to be providing this to a lot of folks out there if you wanted to take a look at it and use it or whatever. Being able to just download it, I wanted to make sure that that information was up to date, which is why we updated over this past weekend. Normally it would be next weekend. Usually it's in the middle of the month that I do it. And one of the main reasons I do it in the middle of the month is when we update our portfolios quarterly, I like to have the AD line done right before the portfolio reports or the portfolio stocks are announced. So that's some of the method to our madness here at Earnings Beats. One other thing I want to mention right now, and that is, if you are not a Stock Charts member, you might be looking at this and saying, well, I don't use a Stock Charts platform. This is no good to me. Well, that's not true, because actually we have an Excel, a CSV format on Excel where you can download all of the ticker symbols in our chart lists and then upload those right into your own trading platform. And we've got on our website how to do it. You can always reach out to our support team, reach out to support@earningsbeats.com if you want more information or if you need to be pointed in the direction of how you would do this. So it's not just, we have a lot of members that are not Stock Charts members. You're not required to be a Stock Charts member. I think it helps because literally you can take all of the work that I do in the Stock Charts platform, click on one link, type in a password, and it's in your account at Stock Charts. Everything I just did, strong AD, going through all that manual labor to get it down to 284 stocks, that you don't have to do all the work. We did it for you. You download it right into your account. So it's pretty efficient. And I think it's a great service. Of course, we built it. And so, of course, we're going to say that. But I think our members, those of our members that have been with us for so many years, I think tells us as well. All right, so updated monthly. Is it annotated? No. Think about it. All I'm trying to do is provide stocks that have a history of trading better in the afternoon than in the morning. It's more of a day trader kind of thing. I'm not looking to hit support. So there's no reason to annotate it. It's just giving you the stocks that have very strong AD lines. You can paper trade it. You can do whatever you want with it. Try to get more comfortable and just see if it works for you. Find some of these really strong AD line stocks and look when they're down. You want me to show you how easy it is on the Stock Charts platform? All you have to do is go in, hit summary. And let's say, you have a routine that you do this at 11 o'clock in the morning. And then what I would do is I would do percentage change. There's the top percentage change for the day, and here's the bottom. So of the stocks that are on here, Asana software, all these software stocks, a lot of them just getting killed one after another. They'll be back, but growth stocks just being absolutely torched right now in the market, especially over the last few weeks, 3 weeks or so. But you can start off like at 11 o'clock in the morning with this chart list and then simply look at the percentage change. And if you see one that maybe is among those that maybe it's among the 20 that I said I really like, or maybe even just set those 20 up in a separate chart list if you want. The AD line will change from time to time. So you do have to be careful, make sure you keep it updated, but see which ones are down in the morning. Go in 11 o'clock. If you see one that's down 3%, decide how much you want to buy. Put it on, paper trade and do this for a while. Do it for a month. See if you would make money doing it. If you're not, then ignore it. Maybe it doesn't work for you. If it does, it might be, especially if you're retired and you're home, this might be something that, can generate a little bit of extra money for you. Anyway, that's the strong AD chart list. It's not numbered. Again, doesn't really need to be numbered because it's not anything that I'm doing chronologically. It's not like I'm checking earnings dates, anything like that. It's simply a scan that I'm running at Stock Charts, putting them in the chart list, and then going through and doing my filter the way we talked about. Any outside sources used? No. So strong earnings, I use Zacks. The raised guidance, I use benzinga.com. Strong AD, it's just Stock Charts. It's just running a scan engine and then going in and deleting the charts that I don't like. So it's very simple, no outside sources. And then scans, I don't even think running scans against this chart list. You can, if you just happen to like stocks that are trading above, that are trading with a rising AD line, you might say, hey, if I run a scan against this, I don't have to check the AD because I know the AD line has been strong, which is why it's on this chart list to begin with. Maybe you run a scan of stocks testing their 20-day moving average. And, by virtue of running the scan against this chart list, you'll know that any stock that comes up on that scan result will also have a strong AD line in addition to testing the 20-day moving average. All right, let me move on. I want to talk a little bit about see if I can find it here. Let's take a look at the scan for the Bullish Trifecta chart list. So this is the one that I think is really unique. Well, let me just go through and show you how we do it. So this was just starting off from stock charts, hitting new scan. And this is what comes up. This is the default. So first thing I do is I just get rid of this. I don't need to worry about volume, because what I'm going to do is I'm going to look for stocks that have beaten Wall Street estimates as to revenues and earnings per share in their last quarterly report. I'm going to make sure that they've also raised guidance. And I also want to make sure they have a strong AD line. So this is kind of a combination: fundamentals, technicals, accumulation. I mean, it's kind of got a little bit of everything in it. And if a company has been on our strong, or is on our strong earnings chart list and is on our raised guidance chart list, that's telling us right away that fundamentally, these stocks are pretty solid based on how they've reported. Management team's executing. They're raising guidance, so obviously they have some confidence in what they're doing. And then throw in the strong AD chart list, and that also will add a little bit of, well, it looks like maybe Wall Street might be accumulating the stock. And so that trio is how we came up with the bullish trifecta, if you will. So all you have to do in stock charts is go down here. This is your chart list. I can go down and grab any chart list I want. I can run a scan against that chart list. So what I'm going to do is just run 3 chart lists against one another and find out which stocks are on all 3. So I'm going to go in, I'm going to grab the strong earnings, latest strong earnings chart list. I'm going to add that. Then I'm going to go down and I'm going to grab the raised guidance, latest raised guidance. I'm going to add that. And then the last strong AD chart list, I'm going to pull that up and I'm going to add that. And so now when I run this scan, it's going to give me only those stocks that are on all 3 of these chart lists. Now, I don't really want to get into a scanning session, but what you could do is you could say, give me all the stocks that are in this chart list, or you could use the you could just use the or signal, and then I think also we might need another bracket, beginning and end. And there you go. So now this scan would then return everything that's on any of these chart lists. So essentially, if you're on one of the chart lists, you're going to be on the bullish trifecta. Well, we don't want that. That's going to be a really big chart list. So what we want, we get rid of that. Get rid of that. And let's go back to and, because again, we want stocks that are on all 3 of them. And so now we're back to that. So let me run this scan. And there are 39 of them right now. And when you look at them, I mean, scooter score, we can run scooter score. Most of them have pretty high scooter scores, which I would expect, but some of them don't. You can see a couple down here at the bottom. Stocks that have been hit really hard. You're going to be looking probably at semiconductors, travel and tourism starting to get hit pretty hard, software, more growth type stocks I think are going to be down here, more technology, more consumer discretionary, because recently those stocks have taken such a big hit. But normally when we're in an uptrending market, you're not going to see too many low scooter scores like this. Most of them are going to be above 70. And I would say, a good number of them would be in the 90s. But look at the stocks that it's pulling up. AppLovin, Palantir. Yes, these stocks are getting killed in the short term, but these are stocks that have been great performers long term. Brinker, EAT, if you haven't seen that chart, it had a huge run recently in that restaurant space. Gilead Science has been strong in biotechs. Okta just recently came out with earnings, very strong earnings in the software space, one of the few. Reddit's been getting absolutely killed, but that's another one that's been very strong, or had been very strong before, getting pretty good haircuts, probably 50% off of its high. At least it was last time I looked. And some of these stocks, by the way, when we do finally get a bounce, you're going to see many of these stocks have some pretty serious moves back to the upside. The big problem is just trying to time it and get that timing down. But these are great companies, and I think if you focus on these over the long term, this particular chart list, I think you're going to find a lot of really good stocks in here, because remember, it's not just a random company that raised guidance. It also had to have beaten guidance, and it also has to have a strong AD line showing potential institutional accumulation. So anyway, that's what I wanted to go over with our two chart lists this evening. I do want to talk a little bit about the stock market. I wanted to bring up the equity only put call ratio. I know many of you are, wondering what the heck's going on in the market. Are we just going to go to zero, or are we going to go back up, or, where exactly, what are we going to do? Well, one of the things that I like to see is I want to see fear coming into the market when we're selling off. And right now that there's a little bit of a problem with that. This is a 1 year, excuse me, it's a 1 year chart of the equity only. This is a 5-day moving average of the equity only put call ratio on the top and the S&P 500 on the bottom. Now, what you need to know about this is when this ratio, this 5-day moving average, goes up above 0.75, it means that more and more puts are being bought relative to calls, meaning that the market's getting more nervous, more fearful, maybe even panicked. When we see this 5-day moving average down at 0.55 or below, it's telling us that a lot more calls are being bought by retail traders, and so that they are much more complacent. They're very bullish the market. They think that, the options world is a printing press for them to make money. It's an ATM machine. And so a lot of times when you get down here and you stay down here for too long, it can create problems for the market to go any higher. When you get up here, it's starting to show panic, and that's usually where markets bottom. So let's take a look at the last 3 times that we've gotten up to what I feel like, and this is based on history, a lot of studying. When we get to 0.75 on the 5-day moving average, I want you to just take a look at what happens. This is just over the last year. It's happened 3 times. It happened back in April when we had the selling. That was the first really big selling episode of 2024. And when we sold off over those 2 or 3 weeks, look at the 5-day moving average. When we were top here, 5-day moving average was down here in the middle, but we went all the way back up and we hit 0.75. And when we peaked, look at how close that came to matching the bottom of the S&P 500. Let's fast forward to August. So in July, we topped, and you can see S&P took a pretty big tumble, and look at what happened. Fear picked up. We got up to over 0.75, got up to 0.78. And that was pretty close to the bottom. Looked like we had just bottomed and started to move back to the upside. And then again, in early September, we were downtrending. The 5-day moving average goes up. We hit 0.75, just above, and that pretty much marks the bottom. Now, we haven't seen, since then, we've been getting a lot more complacent, and we haven't seen any trips up to this 0.75 level. Now, I can tell you today, and I wrote this to members in the daily market report, one of the key changes today in the market was that all of a sudden, the equity only put call ratio over at the CBOE shot higher, much higher than we've seen the last 2 days. And so it was kind of interesting because the market started to rebound with a lot more puts being bought. We had one of our better rebounds in recent sessions until right before the close, and then we went right back down again. Probably folks a little nervous holding into the February CPI report tomorrow morning. Can't blame anybody for sitting on the sidelines heading into that, because to me, it's a coin flip. And if it goes your way, you can make a lot of money at the open. If it goes against you, you can lose a lot of money at the open. And so you just got to decide if you're that kind of red versus black, roulette player in a casino or, out in Vegas. If that's the way you like to trade and you just like putting your money on the line and gamble, tomorrow is going to be, right up your alley. But for those of us who trying to protect capital, not so much. I don't like putting all my capital up and then flipping a coin and hoping I get it right. I'd rather be sitting out and have the market go up than to be in and have the market go down. Anyhow, but look at this week dropped. So we're starting to come up. See how we're coming up? The fear is starting to build, especially at the very beginning of this drop. And then all of a sudden, as we really start to accelerate to the downside, the 5-day moving average of the fear meter goes down. Options traders are still trading options on the call side like nothing's going on. That's scary because we know how it ends for options traders, especially inexperienced options traders that, get on a hot streak and just think that this is an ATM machine that they're not going to lose. They get overconfident. They don't know how to read the market. And next thing you know, all those options that had so much value completely vanish. So anyway, I don't know what's going to happen tomorrow. I think if the news is bad and we get another big drop, I expect that the fear we saw in the market today will continue. And maybe if we go lower for the next 3, 4, 5 days heading into the Fed meeting, maybe we'll get this fear meter up to 0.75. And it might not matter what the Fed says. It might be a relief rally just getting through the Fed, and options expire next week as well. So if there's a lot of in the money call premium heading into next week, that would be another reason why we should start to see much better odds of a rally. So, on the one hand, I wouldn't mind seeing a little bit more weakness to kind of generate more fear and give us a little bit better odds of catching the market bottom, even if it's a short-term market bottom. I'm not talking about long-term market bottom. I'm talking about just give me, 3 or 4 days where the market gets back 5%. So maybe the S&P 500, goes up 200 to 300 points. And if it drops down to 5,300, that would only be getting back to 55 or 5,600. But that's what I would be looking for from the long side, trying to make, a quick score on, just maybe an options related trade, or it could be fear related, if we get that equity only put call ratio up there. But anyway, this was one thing that I thought was really important. I want to just mention today, because when we are in a high volatility market environment, which is where we are right now with the VIX, up in the upper 20s, I didn't even look to see where we finished, but I'll show you that right now. We finished at 26.92. So we were down a little bit. I think part of that was because of that rally that we saw throughout much of the day after we had a little bit of weakness this morning. But we did turn back down toward the close in the market, and we'll just see how things go when it opens tomorrow morning and go from there. But at least there was one little bit of silver lining today, in that folks in the options market did start to turn a little bit more fearful. All right, so that's basically what I wanted to talk about. It is almost 6:15 Eastern, so it's been almost 45 minutes. Why don't I take a couple questions first, and then maybe wrap this thing up. Actually, Tyler, if you want, you can bring up the screen for the 30-day trial for those on the mobile device, and take a look at questions and see what we have there. Okay, so on your screen now, you can, if you're on your mobile device, you can scan the QR code that's there, and that will take you to a landing page. You can sign up for a 30-day trial. It's free. It's a free 30-day trial. You'll have to give a credit card with us because this is our paid service. But we will reach out to you after the 30 days is over, to make sure you're comfortable that you want to extend your membership. And then we'll even give you some great options. If you really like our service, we'll give you an annual deal that's going to probably cut the monthly in half, if not more than half. So always like to give our committed members an opportunity to join at a discounted rate, or to extend, by the way. We many times will have some specials to try and get low prices to our current existing members as well. Anyhow, Tyler, if you have some questions, we have to go over them.
Yeah, so there were a few in the chat today. It says, Tom, what is your strategy to find stocks that have an abundance of shorts for when the market turns and vice versa for when markets are ready for pullback?
Well, it's interesting that you mentioned that because on Thursday, one of the chart lists we're going to be talking about is our short squeeze chart list, which was just updated at the end of last week. And it provides many of the highest shorted stocks, not in terms of dollars, in terms of float percentage. Or a percentage of float. So float is just the outstanding number of shares available to be traded. And then short percentage of float would be how many shares have been shorted. And if you get up over 20%, that's a high number, and that's what we tend to focus on. So that'll give you some opportunities with potential short squeezes. The only thing I'll say about that, and I'll talk more about this on Thursday, is that your short squeeze chart list, any stocks that really qualify for a short squeeze that are moving up to the upside, you need to make sure that that volume is incredibly high. Not average, not a little bit above average. It needs to be off the charts. That's what makes a short squeeze. And it also needs to be taking out some key levels of resistance, because that would mean that everybody who bought below that resistance level, or excuse me, who shorted below that resistance level, is then going to be potentially forced to cover at higher prices. That's what triggers the short squeeze. So I'll talk about that more next Thursday, but that's a great question there.
All right. Do you have a scan engine prepared to pick these out of the SADCL? If not, can you make one and place it in the preferred scans?
Well, I mean, we create the SADCL, which is a strong AD chart list, just as an acronym that we use. We use the acronyms for all of our chart lists. But we already do the scan to create the SADCL and provide that to you. And what I was saying earlier is I don't really know. I mean, you can use those other scans. We have 5 predefined scans on our website that we created for our members. And there might be some others that we could add, but those are 5 that I like to use. And when you use them against all the chart lists we have, it's going to keep you busy for a while. And I think you probably could find some really good trading candidates. So we don't have any specific to the SADCL, but you could run them. You could use any of them against the strong ADCL, that chart list as well.
All right. And here's one that says, do you answer questions we send in if we subscribe to Earnings Beats?
Yeah, we actually have. We haven't done any the last couple of weeks because we really haven't had a whole lot of questions. But outside of what I've been able to answer, through sessions like this. But yes, we do have a regular Thursday Q&A that we try to go through any questions that haven't been answered. And then we record them and we make those available. We actually have a system in play. Like if, member ABC sends us a question, we will get back to that particular member and let them know on the video where the timestamp is, so they can just go right into the video to have their question, to see what the answer is to their question. So yes, we do have a system, and considering all the research and all the guidance and all the reports we issue and so forth, it is hard for me to try to get back and answer questions, but I know those questions are important to each individual. So we do try our best to answer questions when we can.
And one last question. Can you explain how you get the AD line? I assume on stock charts.
Well, I can show you first. Let me go back over here. And so like my default chart list, if I just pull up, say, I don't know, we'll pull up Apple. And by the way, Apple, I saw this Apple kind of holding on to a key support level right there at 220. Had a lot of tests of that 220 area. We keep bouncing. We fail to hold. That could be Apple is one of the most heavily weighted. Actually, I think it is the most heavily weighted stock in the market. And so if that breaks support, it's going to be difficult for the S&P 500. It's not like some other little small stock within the S&P 500 doesn't carry much weight. Apple's, I don't know, 5-6% or something. The S&P 500, I have to go back and take a look. But it's a substantial amount. So if you get breakdowns in those kinds of stocks, you need to be careful. Anyway, on this particular chart, I've got the PPO and I've got the RSI. And I like to look at the PPO. I like to look at the RSI. I like volume. I like the price action. I like candlesticks. I like my 20 day or 20 period moving average and my 50 period moving average. And then I also like the AD line. I have the AD line on a number of my different charts and chart lists. But if you're just looking at how you set up the AD line on stock charts, it's just down under the indicators. So I don't know if that's the question, but if it is, you just go down here, click on that accumulation distribution line. And then I like to change the height because I like to get a really good look at it. And then there it is. So Apple AD line's really good, even though price action's been weak. So I would argue that even with all this selling, that there are still many institutions willing to buy as all the rest of us sell Apple. Now, if you're asking me how the AD line is calculated, I did talk about it a little bit ago, but I'll just quickly go over it again. The AD line ignores gaps. That's the first thing you have to understand. Has nothing to do. That's the main difference between the AD line and on balance volume. That's one of the main differences between those two indicators. Is on balance volume only considers whether you're up or down versus the prior day's close. And the AD line doesn't care about yesterday's close. It doesn't care about the gap up or down today. All it cares about is what transpires today, open to close. What's the low? What's the high? And where did we finish in the range? And what's the volume? Because the volume's the multiplier. So as I explained earlier, if you, let's say got a stock, $10 stock, the low's $10 during the day, the high is $11, and you closed at $10.50. You closed right in the middle. So you're going to basically take zero change, multiply it times the volume, it's going to be zero, and you're going to see no change in the AD line. If, however, you see that same stock have a low of $10, a high of $11, and it closes at $11, 100% of the volume that day is going to be added to the AD line. If you finish at 10 and you close at 10, then 100% of the volume will be subtracted from the AD line. So when you have a rising AD line, a consistent one, what it's telling you is that it has a very strong tendency to finish in the upper half of its candlestick for that day. So if you get stocks like that have morning weakness, I mean, it could get weaker and then rally later in the day. That's possible. I mean, it's only looking at where it's finishing relative to the candle for the day. But a lot of times when you do get morning weakness, you'll get an opportunity to see that stock rally later in the day. And so that's why I like the AD line, because it gives me a sense of accumulation, and it gives me a different something different to think about besides the PPO, which is simply price momentum, and the RSI, which is also a momentum oscillator, as is stochastic. AD line is not a momentum oscillator. AD line is strictly looking at what appears to be either accumulation or distribution based on what happens during the trading day. Ignore the gap up, gap down. Hopefully that explains it. Anything else, Tyler?
No more questions.
All right. Well, I certainly appreciate everybody coming in. Again, if you just take a minute, hit that like button and subscribe to our channel. We really would appreciate that. That helps us in our algorithms at YouTube to try and help us build our community. I know a lot of folks listen to us that maybe don't have the finances to join Earnings Beats. I realize we're not cheap. I think we're worth every penny of what we charge, but we're not cheap. And so I get it. We want to help as many folks as we can out there. And so that's one way you can help us. Every time you come in, click that like button. And if you haven't already subscribing to our channel will really help. And then when we do these live events like this, I think it will notify you, and so that you don't miss any of these shows as well. So there's a benefit to being a subscriber and turning your notifications on as well. Anyway, that's it for me. Day 3 tomorrow. We're going to talk more about earnings. We're going to talk about the strong future earnings chart list. Sometimes there's a little bit of confusion what I mean by that. Then also earnings accumulation distribution. And finally, upcoming earnings. And that's something that, I think everybody should be downloading. That's one way to look at every earnings report, that came out yesterday after the close and today before the open. We combine all of those, and for that next day, that next trading day, all of those stocks that are just getting their first market reaction after earnings all go into a chart list. And so you can look, and this is especially useful when we're right in the middle of earnings season and there are like 400 companies reporting. If you want to sit there and look at each individual stock one by one and see how they're doing, with earnings, that's fine. But how about putting them all on a chart list and seeing them all at once? Which ones are the leaders? Which ones are the laggards? Saves you a lot of time. So anyway, all of that up on Wednesday after the close. Again, same time, 5:30 p.m. Eastern Standard Time. Hopefully, see you then. Happy trading.